Hello Wolfpack, we're back here with another video today. We're going to be looking at Bitcoin. Of course, Bitcoin has broken down from descending wedge formation. Now, you have to excuse me, I'm still a little bit sick, my voice down a little bit weird still, but that's okay. We're jumping straight into it here. I've had a bit of a lip infection, swollen up a little bit, and it's prevented me from speaking very clearly. But regardless, back here on Bitcoin, 4-hour chart, broken down from descending wedge formation. Why has that happened? A descending wedge formation is typically a bullish formation. It's very clear why it happened, because Bitcoin was not meant to be this high in the first place. And that, some people get very upset when I say things like that. And it's like, well, why did we actually pump? Why did we pump here? We pumped because of Ethereum. Ethereum had news about the Ethereum merge happening in September. Right? Major event on the Ethereum network was occurring, and we saw a massive surge in price action. Bitcoin at the time was actually in a bear flag formation. As you can see here, this larger bear flag formation, it broke it to the upside at the same time as Ethereum started pumping. So Ethereum unjustifiably pumped, and we said this the whole time, it's not going to sustain, right? Because it's fueled by hype, it's not fueled by actual considered price movements, it's fueled by hype. People are hyping and jumping in. So Ethereum was not going to last. It ran straight into resistance. Bitcoin formed a descending wedge by coincidence, but the descending wedge is obviously not a very strong formation because it only formed due to Ethereum breaking out. And now Ethereum's come down, and hence Bitcoin's falling down with it. If you actually flipped over the chart as well, which we did yesterday, you can see that this is by no means, a chart that looks like it's going to be going down. I mean, this is clearly a bull flag formation on the inverted chart. Yeah, we saw a little deviation fake out, but if you're bringing in the 200-week SMA, which is this green line I'm going to bring in here, you can see that very much basically held for support, right? Not fully, but it basically held for support. And if we flip it back to normal size, or normal scale, you can see it held for resistance, and we've actually rejected off that now. And what we formed is more like a actually rounding top formation, right? Rounding top formation, big, in kind of semicircle cup to the upside, and it indicates that, hey, the neckline for that cup is actually here at 20.8K. And so, if we break below 20.8K, we're going to be going straight downwards towards the nearest resistance zone, or support zone, I should say, at 19.6K, right? And 19.6K is of course the 2017 all-time high on Bitcoin. So yeah, not looking too hot. And this is what we've expected, right? The whole time I said it was going to be a fake out. The whole time I said it doesn't look good. What I have said, and this is for the bulls in the chat, right? The bulls in the comment section is below, and people who just need to know the invalidation point. What I have said is that if we do manage, and this is a big if, but if we do manage to close a weekly candle, not only above the 200-week SMA, but also above 23.8K, which I'll zoom in to get perfect. In that scenario, where we close a weekly candle above 200-week SMA and 23.8K, I would say the bottom is in on Bitcoin. Obviously, that did not happen. In fact, we formed a very bearish a hammer formation here on Bitcoin, in which we saw a long wick to the upside, instantly rejected, and we've gone red ever since. So that's not looking good. That could just be the exchange chart I'm looking at though. Regardless, it is a sharp rejection off the 200-week SMA and a sharp rejection off 23.8K. And hence, there's no indication there that we're ready to be confirming a trend reversal at all on Bitcoin. And so we need to be bearish still, because we're still in a bear market, of course, okay? And this is where the 4-year cycle comes in. The 4-year cycle is a date range trend I've identified on Bitcoin. If we go to the 4-year cycle chart, let me get it up here. We can see that the 4-year cycle is actually predicting a Q4 bottom, right? A bottom in Q4 this year. So not yet. Q4 is anywhere between October and December. We're bringing it up right now. You can see that date range trend. We've used a variety of different date range kind of calculations to predict the Q4 bottom. It is not Q4 yet, of course. Q4 is in 68 days. It's not too far away. And that's the thing as well. It's like, well, you shouldn't necessarily get overly bearish at this point in time, because we're closer to the bottom than we are to the top, right? So, even though it's bearish right now, don't get overly bearish. Don't be stupid about it. As I said, we're closer to the bottom than we are to the top. Deleting that chart, we can go back to the daily chart on Bitstamp. We can see that descending wedge just broke to the downside. We can take a measured move from that wedge and apply it to the breakout zone and see that wedge is actually targeting 19.6K. So by all means here, we will be going to 19.6K, and 19.6K, of course, is actually the bottom of this channel formation, which is kind of like magnet. It's bringing the price down. Once you reject from the top, you head to the bottom, and we should, most likely be seeing a small bounce off 19.6K. But regardless, and before obviously breaking downwards, as per we are in a bearish channel formation, right? But regardless, we do have FOMC, which is the interest rate decision in about 2 days, in about 48 hours, which could complicate things a little bit, right? Interest rates, basically, this is how it's gone. I could bring up the chart, but it wouldn't really tell you much. We've had a 25 basis point hike Okay, then we saw a 75 basis point, 50 basis point hike. Each of these circles represents 25 basis points. And then we saw a 75 basis point hike, right? So you can see that not only is the Federal Reserve kind of raising interest rates, they also each event in which they raise them, they're incrementally raising the magnitude of the rate that they're hiking, right? So if we continue to see the magnitude, hike as the rates rise, is kind of a bit confusing. We would see a 100 basis point hike, and that would be very bearish for the market. But at the least, and this is what the data represents at this point in time, the data represents, according to the market, that we're going to be seeing a 75 basis point hike, meaning we'll be seeing the same amount of hike that we saw on the last FOMC decision. Which would basically be, bearish for the market, but it wouldn't be ultra bearish. But regardless, do expect a massive amount of volatility in the next 48 hours, especially as we get very close to that FOMC decision. There's going to be a lot of volatility, and it's likely going to throw off the TA a bit. So I know we said, okay, we're going to 19.6K. That's what the TA suggests. But just remember, when we get to these meetings, when we get to the Federal Reserve meetings, we do get a lot of volatility that sometimes is unexpected. But regardless, at this point, I mean, it's pretty clear that we're still in a bear market trend, right? So regardless of what you want to say, the objective reality is this. Until we break above 23.8K, it's a bear market trend, and hence we have to be bearish. With that said, Ethereum has found support, and Ethereum almost is kind of leading the market right now to a certain extent. Right? I mean, it's the only reason Bitcoin went up. Ethereum has actually found support here. On 1400, and whether or not that holds will basically determine whether Bitcoin drops below the neckline of the rounding top that I spoke about before, or just kind of goes straight down to 19.6K. But honestly, this video is just a lot of speculation, right? I understand this video is a bit all over the place. There's a lot of speculation. The main premises, just to nail them down and get them off the board here for this video, is right. We've broken down from descending wedge on Bitcoin. We've got the FOMC decision in 48 hours. It's going to be very interesting to see what the results of that are. And Ethereum has led the rally, and since the rally was driven by hype, it was unable to be sustained. One more thing I do want to talk about is the fact that everyone's saying, oh, the DXY is, crashing. Zoom out. Zoom out. For God's sake, zoom out. Look at this chart. Does that look like a chart that is crashing, right? People are saying it's crashing because it went from here to here after all of this. Right, it is not crashing. That is a correction, and it's not indicative of anything major on Bitcoin. All right, before we end the video, I want to look at Wolves Crypto V.I.P, BitGet, and the Crypto Academy. I'd appreciate it if you stick around. First and foremost, Wolves Crypto V.I.P. We've released many altcoin trading signals on Wolves Crypto V.I.P. We do one every second day. If you click the join button on the YouTube homepage, you can see the perks that you get for signing up. Now, for just 28 USD a month, less than $1 a day, you're going to get an altcoin trading signal every second day, prioritize reply to comments, a trading psychology video, 2-hour lecture, and access to my TradingView charts, as well as an exclusive Telegram group access where we discuss charts amongst ourselves as VIP members, pretty much an exclusive chat room, which is very, very useful as well. Lots of profits coming through on trading signals. If you want more content from the channel as well, getting an extra video, an extra trading signal from me every second day, for just $1 a month, plus way more stuff as well, as you can see there. It's pretty impressive. It's pretty good. And so we've got 200 members in there now, and you can sign up to become one of them if you want to, or you can just keep indulging in the free content, up to you. Regardless of whether you're a VIP or not, we do use the BitGet Exchange on this channel. For all free members and VIP members, I highly recommend you use this exchange. This is my personal favorite exchange. Half the fees of Binance, non-KYC, no scam wicks, just introduced USDC futures as well as USDT futures, reward center in which you can gain access to over $4,000 in rewards. I'd highly appreciate it if you signed up using my referral link in the description below, and you're benefiting yourself as well. So it's a win-win situation for both of us. And then also, of course, the Crypto Academy Become a Trader course. This is a 10-unit course teaching you from step 1 to step infinite, basically, on how to become a trader. Not only how to become a trader, but how to become a competent and profitable trader. You'll have access to all the information in this course for lifetime. So once you buy it, you've got it for life. If you forget something, go back and check it out. Not only do we do PowerPoints and videos and lectures, we also do quizzes so you can retain that information and test yourself in the knowledge to make sure you're still remembering it, which is a very, very unique thing. We've got 56 students. And again, you can become one of those students if you email us here at cryptoacademycourses@gmail.com, and we'll send you back an email with all the relevant information. Right. Sorry for the slightly choppy video today. Didn't really have a plan with it, just thought I'd freestyle. But regardless, it was still pretty good. So I'll catch you in the next one, guys. Have a good day. Cheers.